Yeah, I know it's been ages. I know, yeah, I know. It's been ages since I came back to talk about boom and crash, and I was always anticipating a favorable time to come back to talk about trading boom and crash, volatility, step index, and so on and so forth. I was engrossed in the crypto world. I was exploring crypto a little bit, so that is what grasped my attention, and I haven't given boom and crash also the required attention. But I'm back. To explore the charts again, to read the charts with you guys. And I also miss you. I know you miss me. Yeah, I know. Yeah, but I'm back. Once in a while I'll be dropping a video. I won't be as consistent as I was because I'm also spending time on the other channel. But then once in a while I'll be dropping some gold nuggets for us to learn from. All right, so today I want to touch on trading divergence and making profits on divergence, multiplying your cash, multiplying your investment, growing your investments. This is Dan Legend, and you're welcome to Boom and Crash Expert Advisor. RSI, I could insert my RSI, which is an oscillator, don't forget, and I'll set it to a period of 4040, and I usually use a Dodger Blue for RSI. I could go for something a little bit thicker so that I can see. So I'll put this here. I think I have my other stuff right there. Okay, now we want to look for divergences in the indicator. So okay, this is fine. Somewhere I'm using 15 minutes. I'm going to increase the time because when your time frame is lower, you have a noisy kind of environment, noisy environment. Now your time frame is lower, you have a noisy environment, so it's best we go with higher time frames. And I'll zoom in a little bit more. Okay, so something like this. Now this is how you spot divergence in any market at all, and then you make money with it. I think the last time I left the boom market, it was a serious upward trend. Yes, this was it. This was the last time I left boom and crash, this trend. And this has been a powerful sell from that end up until here. Okay, so the way you spot these divergences is that first of all, we have a low point. So I'll put my T here, and maybe I'll make this any visible color. Let me go red. And then the text, I'll set this to maybe 24, the size of 24, and I'll write point A, and I'll place it here. Then I'll look for this and then find the next low point, which is B. I put it here as well. So A is higher than B, B is lower than A. And then I come onto my RSI and then I check. So from here, I'll do it this way so that I can easily see it. We have, I'll use this line, I'll connect from A to B, and I'll change the color as well, maybe black. Okay, you realize that there's a slope here, and then you come onto your indicator RSI of 40 and you check whether there's a slope there as well, and you realize the slope, this is more of horizontal or parallel horizontal wise. So it's not good, it's not a good divergence point. Then we have to look for a new low on our charts, which is point C, which is at this area. Point C is here. Okay, so we label this as point C, and then we connect our lines. It is just for visual representation, you don't always have to do it, it's just for you to see. All right, then we come to the RSI, and then we see whether the new low has also created a new low here. So if we take this indicator and then we connect the B low point, which was somewhere here, to the C, you realize that it is still sloping downwards. So there's no divergence. First of all, I need to let you know that the conditions for a divergence, and the condition that indicates that there is no divergence, or there's a divergence, and then you need to enter the market. So if we have this A here, we would bring it here. As the market was moving here, this was one low, and then there was a second low point here. You realize that point B is lower than point A. So if I take this and I draw from here to here, it slopes downward, right? But then if I take this and I trace it from here, the A point, all right, vertical, and I bring it here, you realize that it slopes upward. So the moment it slopes upward on the RSI but slopes downward on the charts, this is a good buy point. Okay, right, but generally this is still H1 and it's trending downward. That means that we can only TP, or we can only take our profit at within a very short distance. A here being a low, and then we have B here being a new low here. All right, seeing divergence here, seeing the price is sloping downward here, but then when you look on the RSI, the corresponding RSI, you realize that this is lower than this point. So there has been a divergence in the RSI, which means that you have to buy at this point. You have to buy here. So this is sloping downward, but this is sloping upward. That is a good buy point. If you are not satisfied with 40 and you still want to see more noise, you can bring it down to 30, and it will show a little bit more of divergence so that you can trade and make money with it. All right, so that's about it. I'll be meeting you in another video. This is just to say that, hey, I'm still alive. All right. All right, so thank you so much. Drop your comments down. Let me know in the comment section, and also do subscribe for more content. Thanks and bye.